Hello friends, in this particular video we are going to talk about best way to research the stocks. So we are going to cover important checkpoints while researching the stocks. So this video is very important for all of you because this video contains main checkpoints that you should be researching before going for any investment decision. So we are going to cover all the important checkpoints one by one. So please watch this video very carefully. Coming to the first checkpoint. This is last trade that we are going to discuss over here. So what is last trade? Last trade, this is the price that shares of the stock last traded at. If it is after the market close or on the weekends, then it is from the last trade when the market was open. So you really need to check last trade before making your any further checkpoint decision or any investment related decision. Now the second thing is trade time. So last time the shares of the stock traded on the market is called trade time. So both of these points are somewhat interlinked, but you really need to take note of both these checkpoints. So what is the third point that you are really going to consider? This is previous open and close. The previous open is the price that shares sold for when the market was last closed. So again, the previous close is the price that shares sold for when the market last closed. So whenever the market was closed last time, this is the previous close or previous open point. So open is of course what they started at when the market opened for the trading. These prices may be different as prices fluctuate even after trading hours. So even after trading hours with news and information that comes to light after the market close. So these points continuously get on fluctuated. As a result of newly available information and company news, the market will adjust the price at each open accordingly. So the previous open and close makes very important role while you are doing any research. So the next point that we are going to cover about is bid and ask. These are the price that dealers and market players pay and sell the shares for. So the bid, sometimes also called the offer price, is what a dealer will pay when a stockholder sells their shares. While the ask is the price they wish to sell their shares for an open market. The difference between the two is spread. The larger the spread, the more expensive a stock is in terms of being able to sell your shares for a price close to what you paid. So this is really important point that is that of course you already know about bid and ask, but this is one of the important checkpoint whenever you are going to do any basic research about any particular company or particular stocks. So these are four fundamental points that you should have been doing, but you must be doing for even a single research for a particular company because this wide level of research can make you help with the big investment related decisions that are going to be ultimately profitable for you. The next point that you should be really taking care of is 1 year target estimation. So what is it? This is the average estimation worth of the shares of the last 12 months. So it is estimated, this is target estimation of 1 year. So this is one of the indicating point whether you should be doing an investment in particular company or not. The next point is days range. So what is this days range? It shows the lowest price and the highest price for which shares traded on a particular trading day. So here you are going to understand within a particular trading day what has been the lowest and what has been the highest price. So Based on that, you are going to make your trading decisions as well. So this is again one of the key checkpoints that you should always be keeping in the mind. Please remember, these all checkpoints are related to any basic research that you are going to do. It is irrespective of whether you are going to invest in that company or you are just going to consider that company, because you really need to research all these checkpoints. The next checkpoint is 52-week range. So it shows the lowest price and highest price for which shares traded in a 1 year rolling time period. So it is not a calendar year, it is a 1 year rolling time period. So within this range of time, you are going to have a good overview about the stocks, about the particular company, as well as the behavior, as well as the trends. So you should always be referring this 52-week range as well. So the next point that you are going to always consider is volume. The number of shares traded on the last trading day is called volume. Coming to the next slide, the important checkpoints are, the first is moving, average volume, which is of 3 months. The average number of shares traded per day over the last 3 months is called average volume. And the next checkpoint, that is really one of the most important checkpoint, which is called market capitalization. So this is the company's worth in terms of number of shares outstanding and the price per share. So this is one of the very important checkpoint that is going to decide your investment decisions, and it is really going to influence because this depends company to company, and accordingly the price per share is different. And the next checkpoint that you should always be doing is profit per earning of 12 months, as well as earning per share, which is also called EPS, for 12 months. So these are also important points whenever you are going to do any research. And the last point that is going to help you in a long term is dividend and yield. So the annual dividend amount and yield are also very important. Although more and more investors are focusing these days on this dividend part. Shares with a high dividend and yield can be a great investment for those seeking good income. Remember, this can be a great investment because this is something good investors or the investors who are looking for higher income, they are always focusing on this particular part. The fact that a company issues a dividend is not always an indicator of a great stock. Although quite often very solid, well-established companies offer great dividends, but they do not always translate to large annual returns. So, however, for the investors simply looking for regular fixed income payments and comparing dividends and yields becomes very important. When doing so, higher numbers are obviously better, and comparison across a wide range of industries are perfectly acceptable. So this is really important part whenever you are going to do any research for a particular company. So these are the main points that you should always be researching before. This is not just before your decision of investment. This is also whenever you are going to consider any company, whether it's just worth for your investment or you are just considering that company. Because once you cover all these points that I have been mentioned in this particular slides, then you are always going to make error-proof decisions. Maybe sometimes you are considering any company which you might not be having a real goal to invest in, but you might see something that might attract you to invest within that company and make you good profit. So it can change your perception as well. So always consider these important points while doing the research about any particular company or stocks. We hope this video have been very helpful for you. Have a nice day. Bye.